Hi guys, welcome to week 7. Here we go. Last week of governmental and nonprofit accounting. This week we really focused our attention on non-for-profit entities and some of the particulars that relate to these types of companies and organizations. So oftentimes we think of, maybe here, Mother Teresa, or on the other side, a food pantry kind of distribution kind of place, charitables, things that we're really familiar with. But also another entity that also kind of comes into the picture, or a different type of industry, also Tiffin University, also a nonprofit, not-for-profit company, organization. So we're going to learn and kick around some of the ideas here right now. What makes these companies, organizations unique, and what are some of the nuances that relate to them. So they're still legal entities. So there's some information in the chapter reading about, the structure and the organization of those companies, those organizations, what we need to do. So a couple of different things on the formation side of things. So we have governmental and non-governmental, kind of as this big dividing line around non-for-profit. Okay, so not-for-profit, remember that a city, a state, a governmental agency is non-for-profit. Okay, they don't exist for shareholder wealth and the generation of shareholder wealth, but instead to provide a service. Governmental agencies or entities more in line with providing services to citizens within its area. Okay, non-governmental. Okay, we have taxable and non-taxable types of non-for-profit. What we're going to focus on is obviously those non-taxable organizations, such as universities, Tiffin University, religious organizations, your church that you belong to, the church that I belong to, okay? Healthcare organizations, so non-profit, not-for-profit hospitals, okay? Understand and know that there's also for-profit healthcare hospitals. There's also for-profit colleges, okay? Universities, okay? I attended a for-profit college. That's where I earned my PhD, Capella University. Okay, you guys are attending a non-for-profit, tax-free, non-taxable university, Tiffin University. Okay, other types of service organizations. So that's where we see a lot of those other charitable type organizations. Salvation Army. Maybe American Red Cross, American Cancer Society. Okay, so those types of organizations are also non-for-profit. And so what makes them non-for-profit? Okay, what makes them tax exempt or non-taxable? Okay, it's their purpose. It's their key purpose. Okay, for-profit companies exist to generate profit, to generate shareholder wealth. And those companies are owned by their shareholders and the like, right? Now, when we go over to non-governmental, non-taxable, okay, who owns Tiffin University? Well, no one, okay? No one actually owns shares of Tiffin University, okay? It's a private, non-for-profit, non-taxable entity. So what that means is that it has a board of trustees that is responsible for the operation and oversight, but there is no legal ownership that resides with any one person. Okay, so that's another important distinction as we talk about these types of companies. Okay. Another area that kind of comes into this week's content is around unrelated business income. So there we're really talking about exempt purpose versus other activities, okay? And so Tiffin University, its exempt purpose is to provide an education, transforming lives through education. That's our mission statement, right? So what does that mean? Well, if we generate income, have sales and revenue unrelated to education, okay, that's where we start to get into unrelated business income that's not centered on our exempt purpose, okay, and that's where we get into other activities. So if we had a restaurant on campus, okay, if that did not fall under a culinary arts program where, you know, the food was sold at cost and it was just kind of a training ground for new chefs and hospitality and that sort of thing, okay, that's one thing. That would probably fall under that exempt purpose, and really its key function is education of those people. Now, if we don't have that type of program and we just happen to have a restaurant that's run by, you know, a more commercialized operation, well, that's another activity. That's not our exempt purpose here on campus, but instead an unrelated business income, okay? The financial performance section, really, it's nothing new really there for any of you in this course. You know, basic financial statement analysis, a couple of new ratios and stuff that kind of focuses more on, you know, our exempt purpose. You know, we might have a few things related to that, but that should be pretty much slam dunks for everybody in this course. Accounting for non-for-profit organizations, still kind of focusing in on our non-taxable, tax-exempt, not-for-profit, non-governmental entities. So, you know, our financial statements, very similar to, you know, they have different names, right? A statement of financial position instead of a balance sheet, right? Our financial position is this, okay? Well, that's our cash balance, our liabilities, our net assets, okay? Just some name changes, kind of semantics, if you will. Net assets, well, what does that mean? That's the net asset position. It's retained earnings in a corporate setting and a for-profit setting, okay? Very similar to what we saw on the governmental side of things. One of the aspects that you're going to see here, though, I don't want to get ahead of myself. The expense, the nature and the function of the expenses, okay? This is also very important because it's a reporting out tool that we have to the public. And so I just share with you some graphics, some information that I grabbed from one of my favorite charitable organizations. So the similar data, just presented slightly differently. So $727 million in expenses that this organization had. $727 million in expenses in this one particular year in 2020. Okay. You can see that number in this data here presented in, you know, slightly different ways, but the same amount here. Okay. So we're categorizing those expenses by their function. Okay. Program expenses, $677 million. That means that relates to our non-exempt purpose. Those are that's our programmatic, that's our dedication, that's our focus, okay? This happens to be an organization called Food for the Poor. They provide food, obviously, as well as housing for folks in the Caribbean area. So they spent $677 million in 2020 on those program-related areas. Okay, so that was literally the purchase of food for the poor, housing, building houses, drilling water wells, those programmatic, dedicated expenses that they had. Fundraising. Okay. We're having, you know, that's the cost of a mailer, a flyer. That's the cost of hosting a special event. That's the cost of having, you know, maybe website development. You know, those kind of advertising, those types of fundraising. That's their focus. Okay. So marketing folks and those sorts of things. Administration, you know, there we're talking about, Obviously they have accounting staff because they're, they still have to do this type of accounting work that you guys are learning about here this week, right? So we have accounting people. We have a president, we have other administrators that are there to serve other purposes, right? Contract compliance, maybe some legal staff, all sorts of those types of things to make sure that we're being good fiduciaries and following through on the things that we're required to do as an organization. Okay. So just kind of directed in a similar way, so total expenditures, operating expenses, administrative ratio. So what this is just showing is what non-for-profit, non-governmental, tax-exempt companies or organizations are showing here is that there's a strong, the lower that administrative ratio, right, the more we're focusing on program, the more we're focusing on our exempt purpose, right? So that's one kind of marketing fundraising tool that a lot of these larger organizations are going to be promoting and talking a lot about. Back to that financial performance piece. So consolidation is just a little piece on that. There's a little bit of the chapter reading on that, but similar to what you would see in financial accounting, where you have common control. We might have separate entities, but don't want to spend too much time on that. And then the accounting cycle. So one of the things that you see in that illustration is that our net assets and our revenue sources, those can be restricted. Okay, so I might give $1 million to Tiffin University. I might just give them a check for $1 million. Okay, that would be an unrestricted contribution. They can use it for whatever they want. Okay, now if instead I give $1 million and it has to be used in the accounting courses for faculty salaries and wages, or program development, or certifications, or whatever. Okay, I can designate that this contribution has to be used for a specific purpose. Okay, that would be a restricted contribution for purpose. Okay, I could also say I'm going to give you $1 million, but you can't touch it for 20 years. Okay, so I want it to grow, and then you can start to use it. Okay, so then that contribution would be restricted for timing. Okay, so we have different restrictions that donors can put on, strings to put on these contributions. Okay, and then what you'll see in those financial statements is what types of releases actually happened, right? So if I gave $1 million and it was restricted for purpose, but we did some of those purposes. Okay, we did some accounting curriculum new development or whatever it happens to be. Okay, those expenses could be used to start to use some of that contribution that I gave. Okay, and so that purpose has started to be met, so we can use some of those funds, maybe all those funds, maybe some, maybe none. Okay, and so that's what we're starting to see in that net asset section is of the contributions that have been made, maybe this year, maybe last year, maybe 20 years ago, what still sits as restricted, where we have to do something within our program, we have to wait for a specific time, or other restrictions that the donor might have put in place. Okay, and that's what those restricted net assets are all about. They're earmarked for a specific thing or for a specific time. Okay, so that's kind of an intro to some of the high-level items for this week, week 7. Just another reminder, I'll send out a few more through Moodle over the course of the week. This week we do have an early end to our course, so assignments, including the problem for the course, is due on Saturday. So make sure you're aware of that as you plan out and budget your time for this week. So take care, have a great day, and all the best.